The 2020s is witnessing a new breed of fintech. Fintech has been the powerhouse of startup investment growth across Europe for well over the past decade, fueling a sensational rise in entrepreneurial investment. Thanks to fintech, there's more money being invested in startups than ever before, and the interest around the sector has had a positive knock-on effect to the amount being raised across all industries. Over the decades though, the focus of fintech has shifted. As the underlying technology develops, so do the startups trying to impact the sector. In the 2000s, fintech was all about the business-to-consumer play. It was exploring how technology could simplify the lives of consumers. The innovation that won big were the platforms that revolutionized the way customers interacted with financial service providers. Easy online payments and online banking were the key themes for startups and investors. As we moved into the 2010s, this proposition didn't cut it anymore. Fintech evolved into a business-to-business play. Startups were focusing their attention on how they could better integrate financial services behind the scenes and how they could better provide digital onboarding. We saw the focus shift away from payments and a move towards lending, infrastructure, operations, and administration. Collectively, these fintechs made finance more affordable, more convenient, and safer than ever before. As we move through to the 2020s, fintech is going through another evolution. The key areas being tackled by founders are around identity, fraud, and risk. As a result, we're seeing more and more startups focusing on areas like insurance, compliance, privacy, and security. At Robot Mascot, we witnessed this trend firsthand through our clients. Startups like Snib are using blockchain to better secure personal assets and collectibles. Hub are providing transparency to insurance broking through data and automation, while DAX are tackling inefficiencies and complexities in the delegated authority ecosystem. As far as the 2020s are concerned, fintech will continue to dominate the investment landscape, and will continue to see high valuations and huge amounts of funding invested. In fact, we're already seeing investors' incredible appetite for the third generation of fintechs, with $37 billion invested in 2021. This was up sevenfold from just $5 billion in 2020. As we see financial technology getting ever more integrated into our lives and into the operations of businesses, a new breed of fintech is emerging. And many of these pioneers are looking to disrupt the very technologies that paved the way for their development just a decade or so ago.